Hey folks, Signal and Noise, week ending October, Friday the 17th. It says up in the corner there. Okay, what do we got? Got a few things. I think things are continuing along in the deglobalization phase. If anything, it's heating up more and more. So that's something we'll just keep you posted on. I don't need to spend a lot of time on that. We did that in Investing Essentials on Monday night in a coaching call, if you want to have a look. But as we reiterated there, what we're trying to do there is give you that geopolitical stuff. So if you're a bit like, I don't really care, well, you could just go and do a Wells coaching call. But I would say that you should care because I think it's really, really important. Markets. The AI stuff is becoming louder in terms of disappointment in terms of what it's actually achieving. And secondly, there's more and more noise coming around, which I think is going to be a signal about the economics of it and whether it actually works or not economically. One of the things you'll notice in these bubbles, particularly tech bubbles, the dot-com bubble, those sorts of things are generally the market runs well ahead of itself because it gets an idea that this tool, the internet, is going to be a fantastic thing. The artificial intelligence is going to be a fantastic thing. It's going to put everybody out of work, all that sort of stuff. The argument is it's going to be super productive. Just a reminder that in the mid 90s to the 2000 dot-com bubble, there was a lot of talk about the internet will make us super productive and will increase productivity. Therefore, it will increase economic growth. It did neither. Productivity actually fell over the past 25 years, and economic growth is lower now than it was back after the war when we had a lot more government intervention or control of the economy, which I'm telling you is coming back. So the deglobalization continues. You're going to see more and more conflict, and we're going to have this sort of kinetic warfare stuff where it's made up of propaganda, interfering in infrastructure. As I may have said a couple of years ago, even maybe 3 years ago, we're heading towards having dual internets. There will be two of everything. The reason why is because of data access. And that alone will determine a lot of trade relationships in terms of what products will be bought and sold into different markets. At the moment, Albanese, I think, is going to see Trump next week, might be next week or soon, and is a bit like, oh, gee, I don't know about this. You don't want a global carbon tax and all that sort of stuff. I've got a fair idea who's going to win that argument, and I don't think it'll be Albo. But at least Albo will have the appearance of going there going, oh, this is terrible. Oh, well, all right, we'll have to cop it. That's going to happen to a lot of countries. If you have a look at when the tariffs were first introduced, what you see is there was a lot of stuff about, we're not going to put up with this, and Donald Trump's outrageous. Well, basically everybody's fallen into line as expected. When your big brother starts pushing you around and threatens to give you a punch in the head, generally you might have a whinge about it, but you go along with whatever's needed. So you'll expect to see a lot more government control. Trump has talked about setting floor prices for certain industries, critical minerals, and that is going to, in a free market system, every economist under 50 will be absolutely outraged. Because they haven't lived through these sort of periods. What I can tell you is in the 70s, price controls were fairly regular. Mortgage rates were 13.5. That was it. Didn't go up, didn't go down. You're going to see more and more of this, particularly related to national security issues, critical minerals, whatever is deemed needed for national security. And when you look at all industries, it's basically everything except fire insurance and real estate, finance insurance and real estate, the fire industry. What you'll see is there's going to be a lot more government involvement. On that front, that doesn't necessarily mean that investing is going to be awful, but what it means is you just need to probably dial back your um, ambitions and your expectations a little bit. As I've said before, a couple of years ago, the boys and I discussed in the new normal, what you're going to have is probably something close to real full employment. You'll probably have higher inflation, but everybody will be in a job and a little bit sort of fat and happy, rather than having this continuous struggle to keep your head above water and having truckloads of debt on your own personal balance sheet. What that means is the old sectors, and again, we've talked about this with some of the companies that we talked about 18 months, 12 months ago. They will become better in terms of investment returns. So instead of saying, I'm going to make a mozza out of the latest AI company, it will probably be better over the long term to say, I bought this boring railway company, but it paid me 11% per year because it had a 6% dividend. And because I bought it cheap, I had a nice little capital gain there that rolled along. But dividends are probably going to be more and more important as we go through the next decade. The reason why is because in the last decade, we've had enormous price growth in the stock market, the US stock market. That will mean revert, and you'll be looking more at those boring old dividend companies. Hence why Buffett will probably do pretty well, particularly companies that have got a lot of cash flow. Okay, Oz economy, we're tying up more and more with the United States in terms of defence. Same thing, expect more of that. Expect Australia to win out of the rare earths argument because we've got a lot of it. The other thing we've got a lot of is we've got a lot of rare earths in a lot of places where there's not a lot out there other than the blue wing parrot or something, and a lot of dirt. And when you've got a lot of dirt and only the blue wing parrot, which you can bump off, you can actually build things out there like processing plants that do a lot of the rare earth processing that's really dirty and really toxic, which is the reason we got rid of it in the first place. So I think Australia will do fairly well there. I think what you'll find is at the moment, at a government to government level, Australia, the US, and probably Japan, and maybe Korea, what we're doing is we're triangulating a strategy. Like I said about, I don't know, 12 months ago, Australia's got the raw materials. We may do some initial processing, then we'll send it on to Japan or Korea, and then it will go to the United States, and the US will probably supply capital. And by having a price control in their own market, that will generally dictate a price control in our market. Anyway, look, really interesting field. Boys and I are going to talk about it on the podcast, and it'll come out next Tuesday. But most of you have probably already heard it when we did the May coaching call. Okay, unemployment rose a little bit. Got to be a little bit careful there. As I've said before, the economy's just sort of rolling along. If unemployment rises, you're going to see a lot of panic in mortgage markets. So again, I won't linger, just something to keep an eye on. Lesson of the week is basically pointing out where we are in the market cycle, near the top, and that means you need to be really, really careful. One thing is, after having made a lot of money in a market cycle, you're really reticent to take a lot off the table, but you've really got to sort of hold your nose and do that. The reason why is because when markets are expensive, the fall in the market is usually quite swift, and it doesn't need a catalyst. And that's really important because people are saying, oh, that's priced into the market, oh, that's priced in. And that's true, but it's the unexpected event that gets you. And that's where markets can turn very, very quickly. Righto. Okay, we've talked a lot about rare earths. We talked about them in the March coaching call. This is going to go on for a while, probably at least 5 or 10 years. You don't knock up a rare earth facility overnight. However, when the Americans decide that they need something for national security, it's all hands to the wheel. So that's we're going to talk more about that in the future. There's a couple of videos there that are really good to watch in terms of what rare earths sort of are, and in terms of what Australia's position is in it. Rare earths are generally dominated by small caps. So let me give you an example. This week, one of the small caps we talked about went up 60% on Tuesday, I think. The others we talked about went up 30 and 40. Now they're heading back down again. They're down, the one that went up 60 is now down 20 from there. Now, that leaves you still up 40%. But my point being, these things are really volatile, so you've got to keep an eye on them. If rare earths have had a bubble before, we may be seeing a bubble again. We'll just we'll keep an eye on that and we'll let you know accordingly. And lastly, just what we talked on the Well 2 coaching call last night, Thursday night. Med Weber is put a really good stat up here showing that basically you win by buying the cheapest cake countries. Same thing we sort of teach you in the Wells program. Anyway, I will leave it there, folks, and I will see you next week. Cheers, folks.